Hello and welcome to 5-Year Club video number 282. Tonight we're going to be talking about Cobra. This article from bankrate.com. Cobra Health Insurance, beware its bite. Cobra can have quite a financial bite. Do you have to feel its sting, or are there alternatives when you lose work-based health insurance? Those can be tricky questions. Cobra is the temporary medical insurance named for the Consolidated Omnibus Budget Reconciliation Act, the federal law that gives people who have lost employer-sponsored health benefits the right to continue with the same coverage at their own expense for at least 18 months. Navigating Cobra is about as much fun as playing with an actual snake. It's important to do your homework before deciding to either use or refuse it, says Ankeny Minu, president of the nonprofit Foundation for Health Coverage Education. It's essential to find out if you qualify, if it's cheaper to buy insurance through the private market, or if there are ways to reduce Cobra's costs. You'll have time to make up your mind. Cobra isn't just for fired and laid off employees. Anyone covered under a company's health plan, including a spouse, domestic partner, though this varies from state to state, and children, is eligible for Cobra coverage if they lose health insurance due to a qualifying event such as job loss. You're also eligible if you've lost your insurance because of divorce or if your hours have been cut, says John Parker, an independent health insurance broker at the Parker Agency in Niantic, Kentucky. Additionally, children who age out of a parent's plan or family members of an employee who ages into Medicare can apply for Cobra. So just a little side note, I wonder if these people are paying for placement, right? Because this is like a basic outline of what Cobra is. You know, you can find the information somewhere else and like summarize it. And that's how you'd write this article. You'd find the information somewhere else and summarize it. But now you get to like insert these people to say these key phrases. Do they really need to talk to like several different people to get those quotes? I don't know. You have up to 60 days after you lose your coverage to decide whether to take advantage of Cobra, and another 45 days after that to pay the first premium. That means, for example, that if you think you might be between jobs for just a short time, you could try going without insurance for up to 60 days. If you're then hit with a big medical bill during that time, they will be covered retroactively if you say yes to Cobra by the deadline and pay the premium. With Cobra, you pay what your company paid. As long as you can pay, you can have it, says Manu. There's the rub. Cobra is expensive. You're responsible for 100% of the insurance premium. Employees don't realize how much their employer pays on their behalf every month. The average cost of employer-sponsored health plans in 2011 was $5,429 for singles and $15,073 for families, according to a survey by the Kaiser Family Foundation. An employee typically paid $921 toward the cost of single coverage and $4,129 for a family plan. Under Cobra, the entire bill is yours. That means if you were paying $921 while you're working, now you're paying $5,429. No matter how you look at it, Cobra will feel burdensome for people who had been bringing in a salary but now aren't, says Sonia Streeter, a policy analyst with the Kaiser Family Foundation. Another plug. Few people take advantage of Cobra because the insurance cost goes up at the same time income has dropped. Private health insurance policies cost far less on average than Cobra. $2,196 for singles and $4,968 for families. So for families, it's like 1/3 the cost. For singles, it's like a little bit less than 1/2 the cost for private health insurance policies compared to the policy from the employer. Private plans are better for some. The healthy and the young will likely be better off buying individual health insurance policies on the open market, where those groups in particular can find premiums cheaper than Cobra, Parker says. They also could opt for inexpensive short-term gap insurance policies covering only catastrophic illnesses and accidents. Lower-cost alternatives are more difficult to come by for those who are pregnant, have a chronic disease such as diabetes, need expensive medications, or have pre-existing conditions. Insurers charge very high premiums for perceived high risk, Streeter notes. People with medical conditions might have no choice but to pay the hefty price tag for coverage through Cobra, Minu adds. Still, it pays to shop around, she says. If you are turned down by one insurer, try another. Anyone with health issues might also qualify for a state high-risk insurance pool. But premiums are high, and there may be a waiting period of up to a year, Streeter says. The National Health Care Reform Law has established insurance plans administered by the federal government and the states for people who have been denied coverage because of pre-existing conditions. But those plans are not an option unless you've been without insurance for at least 6 months. Taming the Cobra. There are ways to trim Cobra's costs, such as by mixing it with private insurance, Parker says. For instance, if a private insurer won't provide affordable coverage for one family member, use Cobra for that person and then buy individual policies for the rest of the family. Also, note that Cobra allows you to choose any health plan offered by your former employer, so you could opt for one that is less expensive. And if another job is on the horizon, your new employer might pay your Cobra premiums until you're eligible for the new company's benefits. Remember, sometimes Cobra isn't even an option. If an employer goes out of business, an employee is fired for committing a crime, or the company discontinues its health insurance for its entire workforce, Cobra isn't offered. Companies with fewer than 20 employees are exempt from the Cobra law, but their employees may qualify for a state-run mini Cobra plan, Streeter says. All right, well, now you know some of the options if you lose health insurance at the same time that your employment is changing. Why this article tonight? And, admittedly, it's kind of an old article because, which means that this insurance is much more expensive today. It's gone up significantly in the past 6 years because health insurance is super important. I talk about saving money. I talk about investing. You also need insurance in place as defense to prevent you from getting completely financially hosed, to prevent you from needing to file for bankruptcy. And losing a job is not an excuse for losing health insurance. You have to plan this. You have to keep it in place. Health is important. And more importantly, not more importantly, health is important. So it's important to have a financial game plan that matches up with that fact. All right. Thank you for joining me for 5 Year Club video number 282. Hope you enjoyed it. Have a fabulous evening.